How do you know if the breakout is the actual breakout or if it's going to turn into a fake out? In today's video, I'm going to show you how to avoid buying the fake out. Alright, what's up guys? In today's educational video, I'm going to talk about fakeouts and breakouts, and this video is brought to you by crypto.com, which is actually the only single platform where you are able to trade over 200 pairs with up to 10x leverage. You have more than 40 perpetual futures contracts to trade, and you will actually be giving daily bonuses for just being a member of the exchange. And newly listed tokens, you will be able to buy them with up to 50% discount. If you use the link in the description below to sign up to the exchange, you will be given $50 bonus in CRO delivered to your exchange account. So yeah guys, use the link below. It's a no-brainer obviously. Alright, so right here we have FTM, and I've gone to the daily here. So this video is going to be recorded using the my perspective here is going to be the daily and the 4 hours. So if you're trading on the lower time frames, maybe the 15-minute and hourly, the same principles apply, but I'm going to be using the daily and the 4-hour perspective, right? And by the way, if you're watching this and you're new to this channel, please hit that like button and subscribe if you like this content and want to get more like this. Okay, so I've selected this daily level right here. So you can see it's an obvious resistance area right here. So we want to be buying the breakout here, but we want to make sure that it's the actual breakout and not a fake out. So let's go into the 4-hour here, and we can see that there's some good examples here of fake outs, right? So right here on the 4-hour, you have a fake out right here, a fake out right here. This is not really a fake out on the 4-hour, but obviously if you go back to the daily, you would see that it's still a fake out. So how do we what's the definition of a fake out here? Well, definition of a fake out is price peaking above the level and then going below. Normally you would have one candle closing above the level, like you see here on the 4-hour. So you have one candle closing above the level and then the next candle closing below that level. That's an obvious fake out. So the first indication of a level being broken is one candle closing above the level. But obviously, as you can see right here, you will see that it's not sufficient. You know, one candle closing above the level might be a breakout, but if the other candle closes below, obviously it's a fake out. So what I'd like to do when trading based on the daily and the 4-hour, which is my main time frames, I like to wait for a 4-hour open and close above the level. If you get a 4-hour open and close above the level, it's a higher probability that it's the actual breakout. It's a higher confirmation. Now, if you're a high time frame, long-term investor or trader watching the daily and maybe the weekly, you would want to maybe wait for a daily open and close above the level instead of the 4-hour. The higher the time frames, the better the confirmation. If you have a daily open and close above a level, it's a very high probability that that's the breakout. The problem, however, if you're trading based on smaller moves, obviously waiting for daily open and close above a level would be like you're running a high risk of missing out on a big portion of the move. So another very important part about trying to identify what's a breakout and what's a fake out is looking at the behavior of price when it breaks the level, right? So here you can see a classical fake out here, and here's another fake out right here. But here you have a change in behavior, right? So price peaks above here, immediately gets rejected, it gets rejected immediately right here. But here the market kind of gives the market gives a little bit more time above this level. It's obviously a change in behavior according to the last time this level got rejected. So that's a clue that there's definitely there's some bullish momentum coming in, and the weaker the moves become after the rejection. So you have one rejection right here, a pretty heavy move to the downside, one rejection here, heavy move to the downside. If this move to the downside is as heavy as these ones, maybe not heavy but as volatile, it still shows that there's a lot of selling pressure right here. But if the move kind of becomes weaker and weaker and weaker, it eventually, the probability of the next breakout being the actual breakout is obviously higher here than if, you know, on these touches right here. And the more a level gets touched as resistance, the weaker it becomes as resistance. But when resistance has been touched a lot of times and becomes weak, the more touches as resistance, the stronger it becomes as support. And another thing I want to see is a clean breakout, a strong thrust candle kind of going through the level and closing well above the level. This is a good example of a breakout that I'm not liking, because I don't like when you have a resistance level here and price kind of touches it and then kind of hovers right above it. I don't like that. I want to see a resistance level and then a thrust candle going way above that one, and then having a 4-hour open and close somewhere above here. And you would want to have space between the 4-hour open and close confirmation and the breakout level. That is because if you're buying the break and retest level, you want a clean break and a clean rounded retest with space between the breakout and the retest. So let's look at the next test of this resistance area, and let's see if we can see a change in behavior. And I also want to talk about the stochastics RSI right here. As you can see here on this fakeout right here, the stochastics RSI was way in the overbought territory, and it actually gave us a stochastics bear cross right here. Same thing right here, well into the overbought territory right here, and in this area it was way in the overbought territory and actually gave us a stochastics bear cross. And what I like about this level right here is when price started the move up to resistance, stochastics gave us a bull cross down here and then all the way down here. But now we're very close to this resistance area, right? We're very close to resistance area. We're consolidating right below resistance right here, and stochastics RSI is giving us a bull cross very close to resistance. So that's also a change in behavior according to the stochastics, which gives us some clues of the next move might be giving us more bullish momentum, and the bullish momentum is starting closer to resistance, so it might give us an extra push to the upside. And as you can see right here, let's see what happens on the next test of that resistance. We're getting that nice bullish, that bull cross on the stochastics and a round the bottom on the stochastics, and it's still, and that's the push, right? That's the push. Stochastics RSI goes from below 30 to above 30, giving us a bull cross, and that's the thrust candle that I'm talking about, right? You have one candle just crushing that level, closing well above, and we can now say that price has not only taking out this level, but it's also taking out these highs right here, this high and this high, and I'd say that this is now a proper breakout. And what we want to see now is a 4-hour opening and closing. So one more candle opening and closing above would definitely confirm this. And there you have it. That's the open and close. Now, you might not think that, this is a good entry, so you might want to look at entering lower. Now, if you're confident that this is actually the breakout, you might want to be buying like 25 or 50% of your desired position on this actual breakout, because the breakout is now confirmed, right? But you might want to get a little bit lower entry, maybe on, on these highs right here. You can kind of add a level right here where you might want to look at getting in on this level right here. Kind of makes sense, right? So the best possible scenario is a rounded retest of this support zone right here. But if you don't get that, like if this is a high volatility move to the upside and this is a breakout that's not going to retest, you might want to be buying 25% right here or 50% and then entering orders right above that wick, kind of front run that level right here, something like that. And the stop loss, let's say the stop loss would be below the 4-hour thrust candle, which is that wick right there. So that's going to be your stop loss. And then let's just say you're going to use a manual trailing stop to trail the stop up with this move, right? So let's see how this turns out right now. You can also see that on the 1 hour, the stochastics RSI is way overbought, so you might want to see a slight retrace. So let's see if we get that. So that's the retest of the highs right there. So what I've done here is I've selected the highest point, right? The highest point on the chart, looking at the previous breakouts, and then I'm kind of front running that level. So I'm putting orders right above that level because obviously that's the level everyone was going to be buying, and this is the level everyone's watching for a retest. Now, if everyone's watching that level, there's going to be a lot of orders in here, so the chances that it's going to test that area is quite low if there's a lot of buyers in there. So you see the retest happening right there, and you will then see a strong push to the upside from FTM. And guys, there you have it. That's how you want to identify how a breakout is a breakout or a fake out. Guys, if you like this video, if you want me to show you some more tips and tricks on how to confirm a bounce, if you want to buy the break and retest but you're not sure where the actual retest is or confirmation of a retest, let me know if in the comments below, and I will record a new video for you guys where I show you how to confirm that the bounce that you're watching is the bounce to be buying. All right, guys, take care and see you guys in the next one.